Hi guys, Campbell here from the Property Factory. Just been working with the team at the Finance Factory, and one of the most common questions they're getting are from existing homeowners with lots of equity in their house. 20% loan to value ratio, 30% to loan to value ratio. And the main banks are turning these people down, and it's typically because of servicing. Well, the good news is the Finance Factory have a number of what we call near bank lenders where they're fractionally more expensive, not payday lends. We're talking like 0.5%, maybe 1% or 0.75% more expensive, but they don't go through the same rigmarole that the current triple CFA has impacted on these Australian banks, the BNZs, the ASBs, the Westpacs, etc. All Australian owned. These New Zealand banks or Australian banks have gotten around that legally through a different lending criteria on the servicing. Want to know more about that? Talk to the Finance Factory team. They're here to help, and they've got access to all of those lenders. Thanks and have a great day.